Let's find some day trades, swing trades, and option trades. Hello, traders. It is Monday, August 17th. We are about 3 hours into trading. Not a lot going on today. Not a lot that's probably going to be happening throughout the course of the week. Not much incremental news over the weekend. Earnings season is pretty much ended. Profits were down 30% plus on average. We've got economic releases are very, very light right now, so there's not going to be a lot of news on that front. Politicians have left Washington, D.C., so the mudslinging might temporarily stop. Don't count on it. The House is going to reconvene to address post office cutbacks. However, they're not coming back to address the stimulus plan, which is what the market had really hoped for. I think that if initial jobless claims over the course of the next few weeks start to tick higher, especially if they're coming in above 1 million new unemployment applications per week, we're going to see some pretty heavy, pretty weighty price action on the market. When everybody leaves Washington, D.C., and there's nobody there left to run the country, the market typically gets nervous. And this is something that we see every August. Traders are taking time off. I'm going to be doing the same thing. When it's super, super light volume like this, your best trade is the one that you don't do. Now, you know, I've been emphasizing that for about the last week and a half, 2 weeks. The volume is completely dried up. Look at the price action on the SPY. These are the lightest, smallest trading ranges that we have seen all year. The ATR, the average true range, just a week ago was about 40 S&P points. That's fallen off to where it's about 15 now. So there's just not a lot going on. That means that there's not a market tailwind. That means that as soon as a move gets going, it's probably going to reverse. So it's choppy trading. I'm not doing any swing trading, although I did publish a video last weekend that you can see on YouTube. I had two nice bullish put spreads that I think will work out really well. I'm going to highlight one today. Again, I'm not going to be doing this because I'm going to be taking time off. I don't even want to turn on my computer screen for the next week or so because I don't see the market really going anywhere. If it does go anywhere, there's a greater likelihood that it's going to be on the downside than the upside. So I feel the upside potential is much smaller than the downside risk. We are knocking on the door of the all-time high in the S&P 500. That's nice, but there's no volume behind it, which tells me that there's a very low level of conviction. Do you think asset managers are going to be gangbuster anxious to get long this market when they've got horrendous Q2 earnings and when coronavirus is still around? The Q3 recovery that everybody was expecting to be robust, not happening. It's going to be really, really soft. And we can see that from a lot of the numbers that are coming out. Without that PPP stimulus continuing, small businesses who've been able to use that to keep their employees on the job, they're going to have to start laying people off. So I'm not real optimistic in here. I feel that if I evaluate the market, I'm going to have a better entry point for my swing trades a month from now. And I feel that I'll also have better clarity within that month's period of time. I don't think we're going to go much higher. In fact, I think at best we tread water. Now, if we do get a pullback somewhere between now and then, wonderful. Then I've got a better entry point for my swing trades. That's how I'm playing it. So I am going to show you a swing trade. I'm going to show you an option trade in a few minutes. Almost everything that I'm doing is on the day trading side. Even then, we're having to trim our size. I'm trading half of my normal size in the morning, a quarter of my normal size in the afternoon, and I'm setting passive targets. So it's more of a scalpers type of market. I've had 4 trades today. I've had 4 winners, all of them small. I was able to catch a nice $1 winner in OSTK, but that was kind of the exception. So anyway, let's take a look at what's going on. Know that the market is just not going to provide us with much of a tailwind. We'll go into the M5 chart. You can see there's your gap higher. We've got lots of mixed candles in here. In fact, look at the price action from Friday. Mixed green and red candles. That tells you that the market's not going anywhere. We did have this upward sloping trend line right here. Once that was breached, we had a 10p bearish cross right in there. That was a nice short. Get a bullish cross in here, but no breakout to the upside, so that means stick with the position. That ended up being a bearish divergence. And then we take out the low of the day in the last half hour of trading, but then boom, boom, right back into the middle of the range in the last 10 minutes. This market's not going anywhere right now. And again, you can see that we're right in the middle of the trading range for the day. Red candles, green candles intermixed. Keep your trading to a minimum. This is a low probability environment where you can piss away your capital. And trust me, I've been through these every year. You're going to regret it. When the good times come in September, you're going to wish you had that extra capital to trade. So let's go and take a look at some bullish and bearish trades. When I'm talking bullish and bearish, it's very important for you to understand. I am not taking overnight short positions. I've had people posting going, you said short this and you said short that. Day trades. We are in a 10-year bull market rally. We are in a 4-month bull market rally. Do not short the market. That is for an overnight trade, that is a losing proposition. So I can't say that strongly enough. On a daily basis, there's your uptrend line. Until that is violated, that coincides with horizontal resistance at SPY 325. If that support is intact, do not short overnight. Period. Now, there are some intraday opportunities for us to short stocks. So I'm going to show you one today. Yes, if the market's up at the high of the range for the day and we're hitting multiple resistance and we're not able to break through, then we're likely to reverse off of that high and there will be opportunities for us to day trade from the short side, just like here. 1, 2, 3, 4 tries at the high. Bearish cross, 1 OP indicator. Yes, stocks that are weak, we can short in here and try and make some money on them. That's what I'm talking about. And on a swing trading basis, if you are going to trade at all, you should be favoring the long side as long as that technical support is intact. So we're going to take a look at Pop Bull, one of my favorite searches. You can go through and see some of the stocks that are on this list. OSTK is one that I traded earlier today, and I'm going to put the 5-minute chart up. And I'm going to put the SPY overlay because that helps us identify relative strength and weakness. We've got indicators that do the same. So I got long in here. You can see how the market was pulling back, pulling back, pulling back in here. What was the stock doing? Holding the bid very, very well. As soon as the market found support, whoosh, it ran higher. That was good for a $1 gain. I'd already predetermined that was what I'd be happy making. Now you can see lots of green candles stacked one on top of the other. Massive, massive volume. So yes, OSTK was an excellent long today. I only took $1 profit because there's not a lot going on in the market. Could I have stuck with the trade longer? Yeah, but I was happy with a $1 gain today. Let's take a look at another stock in here. I'm going to go into the heavy buying list. And here we've got a number of candidates that actually look good. Tesla has been very strong today. I'm going to take off that overlay for a second. We're going to the daily chart. You can see how Tesla was actually starting to soften. And right in here, they came in with the 5-for-1 stock split announcement. That attracted lots of speculators. Stock split doesn't do anything for the value of the company, but it does attract retail interest. And stock split announcements have a bullish bias to the stock. So you can see how it's breaking out to this new relative high. Tesla looks pretty good. I would day trade it. I would not swing trade it overnight. Nvidia, there you can see if you hover 19th, in 2 days it'll be announcing earnings. So you can day trade it into that earnings announcement, but I would not hold it overnight. As I continue to go down the list, we're going to see a couple of others that look pretty good. Walmart looks really nice. We've got a horizontal breakout right here through resistance, but they're going to be announcing earnings tomorrow. So you can day trade it from the long side, and we can see that relative strength. right in there. You can see how it's actually challenging the high of the day. The market is far off of the high of the day, so it's got some pretty nice momentum into that earnings announcement. You can also see DLTR. Now, this is one that I do kind of like for day trade today. I like that D1 pattern. If you are swing trading, this is the type of pattern I would be looking for. So we can draw that that diagonal alert line by clicking here and by clicking there, and that will continue to extend upward. And you can see that we've got that breakout right here at about the $98 price point. I'm going to check the close right there, which is $99.21. So we have to assume that that 99.21 support level is going to hold. If it doesn't, then the stock is simply giving us a head fake up and a pullback back down. So it is making a new high. This is the type of stock, the type of company that would prosper during coronavirus because they've been staying open. Their same store sales have been off the chart, so they're doing quite well. As far as doing a spread on this, I looked at the August 21st, selling the $99, $98 bullish put spread, and that was there for a 20-cent credit earlier today. Yeah, I guess that you could do that trade. Again, I'm not doing it, but I think that would be a pretty nice trade. You could do that on the notion that this breakout is going to gain momentum and it's going to creep higher and that the market's not going to do anything all week long. The stock does not make big moves, but that's a nice little breakout that you could lean on, and you are about $2.50 out of the money. The problem is that with option implied volatilities contracting right now, when you sell bullish put spreads, you're having to go very, very close to the market. Any little market whiff, and you're in trouble. Now, since we're selling options that expire Friday, even if you get through the day today, your probability of success increases. You get through the night, now you're into Tuesday. You can manage the trade much more effectively because time premium decay is going to continue to whittle away at those options. And on Friday, you'll be able to be rid of the trade. Hopefully, it'll expire worthless. So it's not a long term commitment. You're able to constantly evaluate market conditions. So that's the type of trade that I would do on a swing basis if I were swing trading at all. Again, from the long side, in that video that I showed you, I had two other trades that I liked. I view them as very passive types of credit spreads. One was on T-Mobile, TMUS. And again, you can watch that video. I posted it to YouTube last Saturday. That's a really good video. I explain why this breakout was nice and why that support level right there should hold and why TMUS should fare well. AZN, another candidate for a bullish put spread out of the money. Keying off of this support level right here, you can go in and find out why I like AZN. Keeping my swing trades very, very minimal right now. I did post a really good video yesterday on YouTube, and because I posted it on a Sunday night, it hasn't gotten the same amount of traction that I would like to see it have, but the message was really important. So please make sure that you go in and view this video. I'm going to try and cue it up for you so that you know, and it talks about the option expiration ripoff. And so you'll be able to see that, and I'm going to go in right now and try and load that up for you. So let's take a look at that, and I'm going to go into my YouTube page, and here you can see it. This is the one that you want to watch. The options ripoff and how to avoid it. It talks about option pricing. If you have options that are expiring on Friday that are in the money, I talk about how to price them and how you can tell where they're actually trading, because sometimes the option bid ask spreads are super, super wide and you're not really sure what price you can expect to sell those for. I also talk about exercise. I talk about assignment on expiration Friday. Very, very important. So please make sure and watch that. This is a lesson. I think you'll really benefit from it. Again, the options ripoff and how to avoid it after you watch this video. Please make sure that you check that out. Really important lesson. I'm going to try and do more educational lessons also while the market's really flat. This is a time for us to kind of get our act together. I can get some educational content out there. I feel like when I show you trades, everybody wants to jump on them. This is an environment where you should not trade. You should find reasons not to trade. As carpenters say, measure twice, cut once. You got to be super, super careful because it's going to be difficult for you to overcome day trading mistakes when the market's not going anywhere. So I like DLTR. That's one I'm going to highlight today from the long side. I think that some of the other momentum stocks like Tesla, OSTK, if you're nimble and selective, you can try. Baidu is one that I caught for a couple of nice trades this morning. I like this bounce off the 200-day moving average. I like the fact that the stock had opened, gapped higher above the prior day's close. So we're going to take a look at that M5 chart. I saw really nice relative strength right out of the gate. We're through that price level. I got long in here, made 50 cents on it, made about another 20 cents on another trade that I did. It's continuing to go up and fill in that gap. So that was also a very nice trade. I'm going to put over the SPY overlay so that you can see why I got in the trade. And there you can see that the S&P gapped higher and pulled back right in here. What did the stock do when the market was pulling back? Boom, boom, boom. That's all I needed to see. I was like, okay, there's buyers in it right now. That's what we do. So let's see what we would be trading if we happen to have a market that was peaking. So let's say we go test, get another test somewhere up near the high of the day, which is also right on that all-time high, and the market can't get through, and I've got the market rolling over, especially if it starts taking out the upward sloping trend line and I get a 1OP spike with a crossover. That's what I'll be looking for. Upward sloping trend line that's breached, 1OP spike with a rollover. Okay, now we're ready to try some shorts. What would I want to short? I'll go into my bearish list, and I've got one queued up right here. LYFT. I think lift is a nice short for day trading, not for swing trading. Not until the market breaches support. And the reason that I like it is because it's breaking this horizontal support right here. And you can see how it's below it. It tried to get through the 100-day moving average. It poked through it, wasn't able to hold it. It had earnings right in here. That 100-day moving average served as resistance. And now we've seen relative weakness the last couple of days and pretty heavy volume on that stock, which confirms that the downward momentum is legitimate. So I think that LYFT sets up for a nice short if we get those market conditions lining up. Well, what do you do with this information? You click on the bottom candle right there. You click on that candle right there. You set your upward sloping trend line. If you wanted to be more aggressive with it, you could take a look at this compression right in here that we're in, and you could click on the bottom of that green candle right there and draw a horizontal line. So let's do that. Let's click on that candle right there. We'll double click, and that draws a horizontal line. So if everything's setting up and lift starts to roll over, then I think we've got an opportunity for a short. I think that daily chart is very bearish. When you're shorting on a intraday basis right now, you've got to have the daily chart agreeing with that. So you almost have to have that swing trading short setting up in your mind so that you know that you're on the right side of that trade. That gives you staying power. It's been very difficult to make money on shorts because the market has been relatively strong. That's all I've got for you today. If you like this content, please give it a thumbs up and make sure to sign up for the YouTube channel. Turn on your notifications and then you'll never miss one of these videos. You can also follow me on Twitter. You'll get my pre-open market comments. And when I see something I really like, I'm going to post a chart on Twitter as well. Trade well, Keep it light. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.